Hello and welcome to the Falling Knife Project, where I'm trying to turn $25,000 into $750,000 by trading options. Today I'm going over a trade that I call the closing range compression trade. This trade is based off of a simple market behavior that's been persistent for almost 10 years now that I don't think many people are aware of. And I'm going to show you exactly how I take advantage of it. But before I do, this is not financial advice. I'm not a financial advisor. This is for entertainment and educational purposes only. So again, this is the closing range compression trade. This is one that I run inside of the Falling Knife Project. It is one of the Tinker trades. And it's based on the idea that if at the end of the day, the price of SPX, if it has not moved much from the opening price, so the price that it opened at for the day, that the market is more prone or has a tendency to move a specific direction, and that direction is down. And why do I think that this works? Well, if the market hasn't moved from the opening price very much, that means it hasn't picked a solid direction, right? And that can be an indicator of weakness. At least that's why I think it works. The other factor that I think plays into this is that it's entered pretty close to when the market on close order data is released. If you don't know what market on close order data is, or MOC orders, they are orders that are placed typically by institutions before the market closes that allow them to either buy or sell shares at whatever the market ends up closing at, whatever price the market ends up closing at. They do this so that they don't have to worry about getting in or out of trades and getting fills at 3:58 or 3:59 p.m. But the consequence of this is that that data is released for those orders between 3:50, 3:51-ish, I believe is when it typically comes out. And if there's an imbalance between the buy and the sell side, it can really drive market behavior and it can move the market. So I'm going to show you how I put this trade on. I'm going to do it since the start of 2020 up to current. And what I do is I buy a put. I buy an at the money put. And I'm struggling to click buttons today, apparently. So at the money put, one contract. I'm going to put this on at 3:44 p.m. Now, this trade, let's talk about timing for this trade. So what I find is that the sweet spot is anywhere between 340 and 350. But again, I want to get in really before that MOC data is released, somewhere between 350 and 351. So it does work, I would say, starting around 3 o'clock p.m. So if I were to want to put this trade on more as a hedge instead of a standalone, I might look to put it on earlier in the day. I do view this one, as far as how I run it, as a standalone trade. Okay. So let's see. Intraday movement. Okay, here's the big one. Max move up from the open, 0.1%. Max move down from the open, 0.1%. There's no profit target or stop loss. We're just letting this run to expiration. I'm going to put my fees and some slippage in. So one thing about this trade is I do like to get into this trade quicker. So if there's settings on your bot as far as how quickly you'll adjust to get into the trade, I do set it quite aggressively. We'll let this run and then we'll take a look. Okay, so you can see that the P&L is $25,907. Capture rate 49.5%. I make $147 on average per trade. Max loser $672 per lot, which is reasonable for what I've been running and the sizing of the Falling Knife project. You can see the equity curve looks quite nice for a debit trade, and that each of the last 6 years was profitable. Okay, so we talked a little bit earlier about entering earlier in the day. One consequence of doing that is that you're going to pay a higher premium for doing that, so your max loser is going to be higher. Your average loser is also going to be higher on that as well. So I was playing around just before I clicked record a little bit and you can adjust kind of the mechanics of the trade, the setup, as far as the structure goes. So this one was entered at 320, and I bought a 50 delta and I sold a 30 delta to make it into a spread, right? So the consequence of that is that the P&L is not as high, but it makes my max loser manageable, my average loser actually lower, and then it still has a nice equity curve, and it was profitable the last 6 years as well. So that's it. That's the closing range compression trade. I hope you like this video. If you like it, please click like and subscribe, and we'll see you next time. Thanks.